I think the first place we think about AI is as seeing it really as a helping hand rather than the new face of advice or of investing. Especially as we see the younger generation coming through, that technology is going to be a huge, huge portion of the way that they think about investing and advice.
Hello, ladies and gentlemen. It's great to have you with us for the weekly PWM tea break with my special guest, Corinne Lord, Senior Investment Specialist from St James's Place, right here in London. Welcome to the FT Studios, Corinne.
Thank you.
And what kind of tea have you chosen to drink today?
Today I'm having a peppermint tea.
So many decisions are made over tea. All the machinations in the House of Commons taking place in the tea rooms. The summit between Donald Trump and Xi Jinping over a Chinese tea ceremony. When we look at these politics, what sort of influence do they have on your investors' portfolios?
Navigating geopolitics has always been quite a challenge for retail investors. The behavioural aspect is people want to do something, it's natural. We want to change or make a decision. And I think about it in terms of volatility. Markets go down during these times, but they also go up. And some of the best days we've seen in the market in recent history have been times of what people thought were crisis, especially geopolitical crisis. So that's something we're trying to educate clients in terms of that behavioural aspect. And also thinking about the longer term time frame. Are these geopolitics really changing your objectives? Can you materially predict what's going to happen? Probably not. And I encourage you to think about the Trump-Clinton situation. People thought they had an edge of information, but didn't necessarily get the answers right. And the bottom line ultimately is, are your portfolios appropriate across these geopolitical situations? Not in this particular situation, but across a range of scenarios. I think that's really key.
Because there's a lot of discussion, Corinne, about the portfolio biases, because we're here in the UK, but there's some instability politically in the UK. And now we're seeing the giant IPO of Elon Musk's space company. How are they feeling at the moment about where they put the majority of their portfolio?
Even a year ago, it was, why are we not all in the US? The US is going to continue to expand. People are really shifting away from that concentration idea and really understanding the importance for diversified portfolios, making sure you're in every single area and asset class in the right way. So much more balance coming through. People steering away from the headlines and the politics and wanting to be in much more value and quality areas of the market. So that's a big thing for us. We're not trying to follow the headlines, and we're finding opportunities that may be a little bit underloved, less well publicised as well.
Corinne, you're talking about some unloved stocks. We had a piece by Michael Camp, who works for a startup that's part of JP Morgan. And he was talking about misfits in portfolios, obsolete baskets of stocks.
I think regular reviews, making sure that your current portfolio is still reflecting your risk appetite, your current risk appetite, the time horizons you're looking for, your objectives, but also reflecting the current environment we're in. So I'm also conscious of holding particular stocks or areas of the market that aren't reflecting the environment we're in. So are you holding something where it was really beneficial in a really high interest rate environment or in a disinflationary environment? They're not necessarily where we are now. So that's something that diversification helps with, but also those regular reviews, making sure you're in line with your objectives.
And one of the big debates in portfolio allocation, Corinne, has been about private markets as well as the listed equities and bonds. It's a discussion that's been going on for some time.
It's a deep and real opportunity set. For us, we're not necessarily seeing that push for an increased allocation to private markets from our high net worth or mass affluent clients. We're really thinking about some of the key risks in that. So that's the liquidity, that's the valuation, opacity, and potentially the complexity, which is an issue for some of the less sophisticated clients. I think it definitely has a place, and that's outside of the core liquid component, so maybe more as a diversifier, satellite, outside of the core traditional assets. It's something we think about and as wealth managers analysing and really balancing between the choice that you want to give clients, but also the high conviction that you have in a particular area.
And there are many technology platforms coming in now which allow wealthy investors to access the private markets. And that begs the question, who is the best allocator, the human or the machine? And I'm not suggesting for 1 minute that you should be replaced by a robot in your work, Corinne, we had an opinion piece by Malik Sarwar, and he's saying that, look, the AI, it's helping really good advisors to become even better and more efficient. But the ones who had like a questionable ability before, they're going to fall by the wayside.
I think the first place we think about AI is as seeing it really as a helping hand rather than the new face of advice or of investing. Especially as we see the younger generation coming through, that technology is going to be a huge portion of the way that they think about investing and advice. The human aspect is always going to be key in capturing the nuances and capturing the novelty. That's a big thing. If the technology or AI has not seen something before, the novelty in terms of investment insights aren't quite captured. So that human element is always going to be a key factor, especially as we have that shift towards technology.
And data is obviously really key to this equation. And Tom Williams from Point, he wrote a nice piece for us about how data is used on the sports field and about how that relates to investors. We've got the World Cup coming up, and I know that you and some of your colleagues, I mean, Justin Onukwezi, your chief investment officer, is a huge football fan. I'm sure he'll be giving the teams a bit of time off to watch some of the matches. Do you see many parallels in what we see on the sports field and what we see in the investment world?
With the Arsenal victory recently, 22 years since their last victory, and so the patience and the consistency really paying off. One of the key things I think about balancing sport and investing maybe is that discipline piece and waiting for the right opportunities to strike. When you really back your process, your team, the quality of what you deliver, you're really going to reap the rewards over the medium, longer term, not necessarily those quick wins that aren't as valuable.
I must say, I totally agree with you, Corinne. I love the idea of playing the ball round beautifully in the midfield rather than scrambling the ball in from corners like Arsenal have done to win their title. Thank you so much for sharing your investment goals with us and making sure that your investors are not hit by any late penalties or uncertainties. It's been a pleasure to have you in the studio with us.
Thanks for having me.
That's it from us today, ladies and gentlemen. So I bid you farewell until next week, when we will be looking at the best financial hubs to do business with. Please continue sending in your questions, and I look forward to seeing you for next week's PWM Tea Break.